Hi children, how are you? I think each and every student are enjoying my lessons. So we had completed first lesson and I think each and every student had understood the lesson also. Now in today's session we will move on to the next chapter, and before entering into the chapter let me give you a small example, because as you know this is not at all a new concept. Okay, each and every individual, not only me, you, each and every individual use this, but they don't know what the process is called as, that's all. So let me explain you with small example. Think your mother sends you for buying vegetables. You go to the vegetable vendor and buy the vegetables. Sometimes you won't be having some kind of money, then you will tell tomorrow I will give, like that many people will do the same thing. So that vegetable vendor, because he can't remember the faces, just writes their names, and the next day he will be asking, if not after 1 month. So this is a regular process which you can see with your eyes practically. No need to just to open the books and understand the concept. This is the things which are done in our daily lives, and we also do and you also do, but nobody knows that this is a one process of accounting. This is a process in which the people will only keep the names of the people, that's all, so that they can take the money afterwards. So they will do the business like that only, and this system is only called as a single entry system. That means, for example, till now in the first year you have learnt about double entry system. To know the financial position of the business, you will prepare many accounts like trial balance, trading account, profit and loss account. In the end, you will be preparing the balance sheet to know the financial position of the business. These small vendors, some small business people, what will they do? They won't prepare so many accounts because their budget, their capital will be very low. It will be hectic for them to prepare all these kinds of accounts. But still they want to know whether they are earning profits or loss. Without knowing whether they are earning profits and losses, nobody will be doing any kind of business. So we must know, because we do the business to get the profits only. So we must know the situation in which our financial position of the business is there. So for that purpose, these people just, for example, think one person start the business on 1st January, he will just think what is the capital. Think, for example, he had started the business with 10,000 capital. In the end, he will see whether he has in his hands remained 15,000 or less amount of their capital. That's why, for example, if I want to know the profit, I can easily understand. In the last, if I am having 15,000 in my hands, in the starting if I am having 10,000, then 5,000 will be the profit. For example, that same person gets only 8,000 or 7,000, then the remaining 3,000 or 2,000 will be loss for him. So for taking the decision also, we need to know the financial position of the business. For that purpose, small business holders won't keep any kind of a double entry system of recording all the things. They will only remember the persons with them they are doing the business and just record the names of the people, what is the cash coming, what is the cash going. So this is a very simple process of bookkeeping. That bookkeeping is only called as a single entry system. This is a very interesting topic, very simple also. If you understand, you can easily do it, and in your exams you will be going to get approximately 5 to 7 marks from this chapter. So listen carefully to me, and also try to understand the concept also. Okay, now let us begin our lesson, and the lesson name is accounting from incomplete records, if not single entry system. Both are one and same. Okay, so now let me just read the definitions which are given by the authors. First one is N. Carter, and according to him, single entry cannot be termed as a system as it is not based on any scientific system like a double entry system. For this purpose, single entry system is nowadays known as preparation of accounts from incomplete records. According to him, he want to make you understand that in this system of bookkeeping, you won't be getting any kind of full information about the financial position of the business. You only know whether it is profit or loss. What are the reasons behind the profits and losses, you can't know. For that purpose, you must maintain only double entry system where you will record all the transactions twice, as you had already learned in your first year. So another definition is also given by Kohler, And according to him, single entry system is a system of bookkeeping in which, as a rule, only records of cash and personal accounts are maintained. It is always incomplete double entry varying with the circumstances. So here only personal accounts, that means names of the persons, will be entered, whether the cash is coming or going. Only both the things are kept, which also doesn't give you any kind of full information how your business is going on. For example, if I want to improve my business, I must know what are the drawbacks. These informations you can't be getting in any kind of a single entry system. It can be only found out with if you maintain the accounts in a double entry system. Only few people, small business households will prepare this type of single entry system, because there is no need for them to know how the business is going. They only want to know whether they're getting profits or losses. For that purposes only they will maintain the system. So it will be very easy, very simple, but there will be no scientific rules and regulations which are followed. Each and every person maintains his accounts according to his will or wish. So this is about a single entry system. This is also very, very important chapter. You must understand what does it mean, how the accounts are prepared by these people. Now, before entering into the preparation of accounts, first of all, we must understand in this system what are the things to be remembered. For example, single entry system are also having different types of single entry system. First one is pure single entry system. Second one is a simple single entry system, and the third one is a quasi single entry system. So in the first one, only as it is pure single entry system, only personal accounts are maintained. That means names of the people. Okay, only personal, who is coming, who is giving you money, and from whom you are taking the money. Only personal accounts of the people are maintained here. In the second system, simple single entry system, here personal accounts and cash books are maintained. What is the cash coming, what is the cash going, what is in my hands. So only cash items, okay, not credit, only cash items and personal accounts. Here credit accounts are maintained. As if you know, personal accounts are prepared only to remember the names of the persons on the credit basis. So this is called as simple single entry system. And last one is quasi single entry system. In this system, personal accounts, cash books, and some subsidiary books are also maintained. In the first year, you have learned some subsidiary books, purchase book, sales book, purchase returns book, sales returns books, like that. Here, according to the necessity, the people will maintain personal accounts also, cash books also, and some subsidiary books are maintained. These are the three types of single entry system. Okay, this is the theory part. You must understand, because in the exams he may be asking for the 2 marks, what do you mean by single entry system and what are the types. Then you must write down the definitions of the single entry system and then write the types of the single entry system. Now we will discuss about what are the differences between single entry system and a double entry system. As I already told, in the first year you have learned how to keep the books on double entry system. If you remember, we will write a trading account, a profit and loss account, and also prepare one statement which comes last. This is called as balance sheet to know the financial position of the business. Now you are learning about single entry system in this class, in which all these accounts are not prepared, only personal cash books, sometimes subsidiary books are maintained, and this suits only for the small business persons, not at all for a big companies. Okay, companies compulsorily must maintain double entry system on the accounts, because scientific rules and regulations are followed, and government needs to know whether the company is working properly or not. Now differences between single entry system and double entry system. First difference is it is an incomplete system. I already told you, because in this system each and everything is not entered or maintained in the books. That is why it is called as incomplete system. It is a perfect and complete system of bookkeeping. Okay. Second point, it is not based on any principles of accounting. It doesn't follow any kind of scientific rules and regulations which are needed to be followed in the double entry system. Here rules and regulations are followed. Only third point, only cash book and personal accounts are maintained. We had already learned here in the simple single entry system, only personal accounts and cash books are maintained. Sometimes only subsidiary books are maintained. Here in the third point, all types of accounts, for example, you have already learnt personal, real, nominal accounts are maintained. Here trial balance cannot be prepared, because to prepare the trial balance we must know each and every point which is not at all covered in this type of bookkeeping. Here trial balance can be prepared because all the things, purchases, sales, personal accounts, real accounts, nominal accounts, each and everything is maintained. That's why trial balance is prepared. Here only we can see whether we are getting profit or loss. That's all. We doesn't know how the business is going on, what are the necessary steps to be taken to improve the business, why we are facing the losses. All those things are not at all known in single entry system. But when it comes to the double entry system, we can know true profit or loss can be calculated by preparing trading account, profit and loss account also. It is not possible to know the financial position of the business, but here true financial position of the business can be found out in the preparing the balance sheet. Errors cannot be detected and rectified here because we can't know. We only know what is the money coming, and also only personal accounts, but what is going, how the business is running, what are the defects, what are the drawbacks cannot be detected here. For that purpose, it is only, that's why it is called as incomplete. Here errors can be detected and also rectified. In the eighth point, it is used by small traders who doesn't know how to maintain the books on double entry system, and it is used by all types of business organizations, companies, big business houses will maintain only these type of system, that is double entry system. It is not recognized by the government, but here double entry system is recognized by the government. It is used for the auditing purpose and know the financial position, whether the business is running genuinely, etc., and tax purposes also, so that the government only thinks of those companies which maintain double entry system, which is compulsory for the companies to maintain. Okay, so this is the differentiation, these are the differentiations between a single entry system and a double entry system. Okay, now we will come to the topic of how to get the into the accounts, and for example, now only I told these are done by the small business houses only to know whether they are earning profit or whether they are getting losses. For that purpose, in the first year you have learned how to calculate the profit in a net profit. If you remember, in the profit and loss account you will be getting whether the company is going with the profits or losses. In this chapter also, in the system also, here we also get a profit or losses. For that purpose you are having some kind of methods and process to do the accounting, so that we can get whether the organization, whether the small company is going through profits or losses. For that purpose, as in the first year you have prepared a trading account, profit and loss account and balance sheet, but in this lesson you will be preparing statement of affairs. Okay, statement of affairs, it is also called as net worth method, and also called with another name also, that is called as capital comparison methods. All the three things will get you whether the company is, whether that small organization is going through profit or loss. So for that purpose it will always prepare statement of affairs. If not, that is only called as net worth method. If not, capital comparison method. Another method is also there, which is called as conversion method. So here in this lesson he had given you what are the two types of methods, but you will learn how to prepare only the first method only, that is statement of affairs, net worth method. If not, capital comparison method. In your syllabus, conversion method is not at all included. So we will learn how to prepare statement of affairs method. So coming into the topic, now statement of affairs. Now only I told you they only wants to know whether we got a profit or a loss. So for that purpose, one small formula is there. Profit is equals to closing capital. If profit is equals to closing capital greater than opening capital, that means if the closing capital is greater than opening capital, then you will be getting profit. And if the same thing, if the closing capital is smaller than opening capital, then you are going to get the loss. That means opening capital is nothing but the capital with which you start a business. For example, I am starting a business with the 10,000 means 10,000 means is my opening capital. In the end, in my hands, if 15,000 is remained, that is called as closing capital. If you just understand that closing capital must be always greater than opening capital, then only you will get a profit. For example, if you just went outside and your mother asked to bring some kind of things and given you 1000 rupees, think you had bought all the things and 200 is remained in your hands, then that is the profit you are going to get. Okay, like that here business houses also only think of closing capital and opening capital. Increase in the capital at the end will be always profit, decrease in the capital at the end will be always loss. I think you had understood what you mean by capital at the beginning and what you mean by the closing capital. Now let us take small example and try to make you understand. Now let us begin with a small example. Okay, here I had given you in the first example, Sai Teja started his business with rupees 55,000 as his opening capital. Okay, his capital at the end of the year is rupees 75,000. Find out a profit or loss. Now only I had made you understand what you mean by opening capital and what you mean by closing capital. Here closing capital is 75,000 and opening capital is 55,000. If you subtract, you are going to get 20,000. As you can easily understand, it is the profit. Take another example. A trader's capital at the beginning of the year is 60,000. Capital at the end of the year is 45,000. Calculate profit or loss. Here closing capital is 45,000 and opening capital is 60,000. You can easily see that opening capital is greater than closing capital. That means you are starting the business with 60,000 and ending up with the 45,000. That means 50,000 is loss. So this is a very simple way of calculating whether you are getting a profit or loss. These are only maintained by the single entry system bookkeeping people. So this is only called as a statement of affairs. Okay, now let us start doing accounts now. Okay, these are the small examples only to make you understand what you mean by opening capital and closing capital. Now we will enter into the problems which you are going to face in your exams. So how to calculate statement of affairs. Okay, this is very interesting topic and this includes your first year syllabus also. As you remember, assets and liabilities always comes in your balance sheet. Assets, fixed assets, furniture, cash in hand, cash at bank, like that. And liabilities, bank overdraft, bills payable, which you are already seen in your first year syllabus, and I think each and every student knows how to prepare the balance sheet. Here also we will be having some kind of assets and some kind of liabilities. So for example, think I had taken some kind of assets here, cash in hand, so and so, stock, furniture, cash at bank, sundry debtors, machinery. So all are the things which are assets. Now see, here we are having liabilities. So here also banks overdraft, bills payable and sundry creditors. So in the problem he will be giving some kind of assets to you, some kind of liabilities to you and asks you to find out the capital. As if you are already learned that capital is nothing but total assets minus total liabilities. So to prepare statement of affairs, we must know the capital, because capital will only tell whether that person is getting profit or a loss. Okay, so here I had given you the pro forma of a statement of affairs, as you can see with your own eyes. Okay, so here this is the pro forma as if in the balance sheet, no changes. You can easily see. You must write the heading statement of affairs of so and so person as an date. Okay, here liabilities and assets, and liabilities are written this side and assets are written this side, as I already remember. Okay, now the differentiation between these things, assets, add all the assets, add all the liabilities and you take the differentiation, that is only called as balancing figure. That is nothing but the capital. So this is the way how to prepare the capital. We must know the capital, then only we can understand whether we are going to get a profit or loss. For that purpose, you must always add the assets and add all the liabilities. That means total assets minus total liabilities. Then you will be getting one figure, that is nothing but your capital. That is only the balancing figure. Okay, now we will take one example and show you. Okay, now Satvika keeps her books under single entry system. Her financial position at the end of the year is as follows. Here he has given you the financial, he has given you some kind of assets and liabilities. In this only you must find out whether these are assets or liabilities. As you remember, cash in hand is an asset, bills payable is an liability, sundry debtors is an asset, furniture is an asset, bills receivable is an asset, stock in trade is asset, and sundry creditors is the liabilities. That means you are having two liabilities and remaining all are assets only. And and he asked you to just ascertain her capital at the end of the financial year. See, always I tell you that pro formas are very, very important. Headings are also very, very important. Here, statement of affairs of Satvika as on 31st March 2015. As you can see, the pro forma, I had already explained how to draw the pro forma. Now, liabilities and assets, the same pro forma of the balance sheet. Write down the liabilities on one side and assets on another side. Just total all these things. That means 6,000 plus 15,000 plus 3,000, 4,000 plus 12,000. And the same way, add all the liabilities. 2,000 plus 3,000. Then it comes as 5,000. Okay. So the balancing figure is only 35,000. Then automatically you will be having the capital. The balancing figure is nothing but the capital of the business. That means you must add all the assets, you must add all the liabilities, then total assets minus total liabilities is only the balancing figure, which is 35,000. So in this problem, I got the capital of Satvika as 35,000 rupees. So because I already told you, they won't prepare all the accounts, they will only want to know whether what is the capital which they are going to starting the business and also the end capital of that business, so that they can find out whether they are getting a profit or a loss. Okay, so this is a very, very simple lesson, but is very, very important because in your exams you are going to face some questions from this chapter. So here this lesson is not completed. We will continue in the next session, but the topic up to here I had given you some kind of assignment to you, so that you can easily understand the topic. Once again, go through the lesson as many times as you want and try to understand the lesson and complete the assignment. The first, let me explain you the assignment also. The first question, he asked you, I am asking you what do you mean by single entry system, and at least give two definitions about single entry system. Second question is, what are the differences between single entry system and double entry system? These are most two important questions from this lesson. You must just try to understand and also try to write the answers also. Okay, here I had given you one small problem and asked you to find out the capital at the end of the year. So here one assets are there, find out what are the assets, what are the liabilities, and try to find out the capital. So this assignment is very, very simple, and each and every student must complete their assignments. Okay, so that then only you can understand the next session, and it will be having most important question which you are going to face in your exam. Okay. By this I conclude my session. I think each and every student has understood the class. In the next session we will continue the lesson. Okay, bye for now.